All right, guys. I was going through the comments. Today we're going to be talking about VICI properties. And I was going through the comments of one of the YouTube videos on this stock, and the comment was, "Why buy VICI properties when you can buy Realty Income?" Realty Income, I'm pretty sure the most popular dividend stock. Everybody's talking about it. And today I'm going to compare VICI to Realty Income and see which one is worth buying more and which one is going to earn you more money. So first off, the replies on that comment was the first one said that Vici owns a bunch of acres in Vegas that hasn't been paying rent yet and will be paying rent in the future, that they haven't turned into rent-paying properties. Other comments said the rent is contracted out for 60 years and they also give out loans. So first thing we can see, just recently in the news, they gave out a loan, a 250 million loan, and they have committed to giving out $720 million worth of capital to one of their renters for renovations, upgrades, and such, which they will be earning interest to. So Vici Properties, let's take a quick look at what they do. They have a bunch of properties in Vegas, gaming facilities, gambling. Everybody goes to Vegas. I live in Canada, and I know everyone who's turning 21, they're always so excited to go to Vegas, and they go to Vegas, and people that go Vegas go again. It's a huge place. So they have 39 other non-gaming properties. They have a bunch of hotel rooms. I think they have 60,000 hotel rooms. And if you look at their investor presentation, one of the biggest things about Vici, which I like more compared to than Realty Income, is because they collect 100% of their renters rent. They take 100% of them. Usually it's in the 80s and high 90s for other REITs, but this one collects 100%. And you may ask why even in 2020 they collected 100% of the rent, because they do a thing called triple net lease. What is triple net lease? Let's Google it. So triple net lease is essentially when the landlord assumes no costs. So the renters pay property tax, building insurance, utilities, and even maintenance on top of the rent. So which makes Vici a lot more secure. And one thing that's you can say they're bearish or bullish about Vici is because they only have 13 tenants compared to Realty Income, which they have like 15,000 and thousands of renters. So they are much more diverse than Vici. Vici is more concentrated in Texas. And another thing is, look at this. The remaining lease term is 42 years. So for the next 42 years, they will get 100% of the rent from all of their renters. And the REIT average is 8 to 14 years. 2020 rent collection, 100%. It makes you feel a lot more safe in Vici, that knowing that they will be providing cash and will be able to pay off the dividends. Vici hasn't been around a long time in the market. They've IPO'd in 2018, and since they haven't grown much. Since 2018, they have went from $19 to $27. But let's look at the underlying business, how the business has been performing. Boom! Look at that. 2020 they did $1.2 billion in revenue. 2023 they did $3.6 billion in revenue, with over $2.5 billion in earnings. Huge. They've been consistently growing their dividend. I think the last time they grew their dividend by 7%, which is really nice to see, and they're doing great. And then we can compare this to Realty Income and see how they've been doing. Also fantastic, from 1.6 billion to 4 billion and 800 million earnings. So Vici has a lot more earnings, as you can see, and Vici has a lot smaller market cap, $30 billion in market cap compared to what, $46 billion in Realty Income. They both pay the same, almost the same dividend yield about 6%, which is very nice and safe. Both of them won't go up, won't double in price or go down in price. So both are good and safe investments. They're both REITs. And yeah, so there's a bunch of things. We can go over the financials and whatnot. The main things are the 100% triple net lease compared to O and other REITs, which makes it a lot more safer. And then I said a note to myself that I should go to page 7 of the investor presentation. So what is page 7? Boom, estimated CPI preparation. Okay, so this pretty much means is that they, in their contract with all the renters, they are allowed to raise the rent price to the renters, which makes it more inflation proof, because as inflation grows and the money is worth less, they can raise the rent to be in the same spot as inflation. Boom. All right, so they Vici property has about 500 million in cash right now on their balance sheet, and so does Realty Income, I think. And then if you look at this statistics in Yahoo might have this wrong, but for Realty Income, it gives it a PE of 50 and forward PE of 37, which is insane compared to Vici's 11 price to earnings, 11 times price to earnings. And then if you look at all this, price to sales 7, price to book 1.1. Price to sales, I guess, no, Vici's still cheaper in that case. Insiders both have less than 1% insiders holding, and Vici has 99% of the shares are owned by the institutions. This makes it a whole monopoly. And one thing, if you look at these statistics, look at Vici, look how nice they have, because you guys are giving them money and how profitable they are. How was the return on assets, that the money that they get? 5% and 10% in 10% return on equity, compared to Realty Income of 2% and 2% of return on assets and equity. So Vici has been doing a lot better with the money. The management team has been doing a lot better for the company. Realty Income growing 33% year over year from the last quarter. How about Vici? 8%. Okay, we don't like to see that. Quarterly earnings growth 13%, not bad. Debt to equity, their balance sheet are pretty similar. They both have 60% total debt to equity. They both have around the same cash, and they both have a lot of debt. 60% of the 40% of the balance sheet is just debt, which is not the best thing to see, but it is what it is. Also, another con, they both don't have a lot of insider buying. As we can see over here, this is Vici. Mostly just selling. You just see red. It's not the best thing to see. If you can look here as well, how like the company's doing great. They're raising their earnings. They're raising their revenue and free cash flow. It makes it safer knowing that like they will provide the money to be able to pay your dividends and not go bankrupt. And yeah, they're trading around the same price as it was in 2019, 2020. Okay, a little higher, but 10-20%. But the company has doubled their revenue since then. It's looking undervalued to me. But all the REITs in the market are currently down. And another bad thing that I really want to point out is the dilution. So both of these companies are what's called diluting shares and raising more shares to make money. Why do they do this? They do this because the interest rates are currently high, so it makes more sense for them to dilute the shareholders and raise the money that way. They pretty much doubled the amount of shares since 2020, and you might say, oh, Realty Income for sure hasn't been doing that. And if we look at that, and we look at Realty Income, the share dilution, it's the same, if not worse. Let's check it out. From 370,000 to 800,000. So that's even more than a double. Can't escape it. That's what the REITs are doing. It is strategic. Interest rates are high, and when the interest rates do get lower, REITs will go up in price, and you will get some money. See the prices go up. So this is Realty Income, nicely growing from 2021 of half a billion in revenue to 1.2 billion in revenue. And if you look at Vici, almost $1 billion in revenue from 300,000 in revenue. So they're growing a lot more aggressively. Balance sheet looking the same. They have cash on hand. They have 44 billion in assets. And Realty Income has 68 billion in assets and 680 million in cash on hand. But if you look at the market cap is significantly larger in Realty Income. So that's why I see Vici as being a lot cheaper right now and a great dividend buy. And if you look at Vici, is it the right time to buy? It's sitting at around $27, $28. I have opened a position today and set recurring buys. Tell me what you guys are doing, which stocks you guys are buying. Are you Vici squad or Realty squad? And tell me what I missed. That's it. I just wanted to let you guys know about the video and let me know if you enjoyed.